I wouldn't say you would get smoked. I mean, in a particular year, you could get smoked, but over a long-term period, when we look at the index and the performance of a diversified portfolio, we believe it would do fairly well. So just to give you a couple more numbers, there's an index in the US called the NCRE Farmland Index.
Artem, welcome to the show today.
Thank you, Gareth. Thank you so much for having me.
Of course. So, talk to us a little about your company. We're talking about Farmland today, which is super interesting. And guys, we're going to be going into different asset class on the show here and there, just because it's interesting and everybody's making a business out of something different out there, right? And so, Artem started a company called FarmTogether. Tell us about what that is. How'd you find it, and what do you do there?
Yeah, absolutely. So we make it easy for people to invest in farmland. Right now, it's only open to accredited investors, meaning you need to have a certain income, a certain level of wealth. But in the future, we want to open it up to everyone. And it works quite simply. I'm sure your listeners are familiar with real estate investing. There's a number of crowdfunding real estate platforms. We do the same for farmland. And in a nutshell, no pun intended, on the sourcing side, we have a great team of institutional level investors that scour US for great farmland deals, and then they will go on the contract. And during that time of contract due diligence, we will syndicate the capital for that deal on our platform. So it's all done online, and then every farm is professionally managed by us, again using working with great farm partners, and our team internally comes from decades of experience in farming and farm management.
Got it. So, how did you get into this? And it's pretty interesting.
The idea came to me back in 2015, 2016. So a little bit of my personal background before starting FarmTogether in 2018. I worked for 10 years for large and small investment funds up in Canada. And Canada is known for being really innovative when it comes to real assets. And so fairly early, I got exposure to investing in farmland. And as years went by, I was always surprised how few options there were for investors to get exposure to what is a huge asset class, 30 trillion United States. And so it's really, a very kind of common story of the founder solving a problem for themselves. Because I couldn't invest in farmland even. I found it difficult. And so I wanted to put my skill to good use there. And yeah, it's been a phenomenal ride ever since.
Cool. So tell me, Artem, how does it work exactly? Like, what is it? Are you finding farms and improving them? What are the mechanics of owning farmland, and how does it
Yeah.
make any money?
Yeah, absolutely. So, maybe just to kind of start high level, how farm makes money, I think it's a great question. Selling they harvest, so whatever they
Okay.
grow, and when we talk about farms, just to clarify, when we're talking about crops, so it will be your corn, your soybean, your nut, your fruit, things like that. So we don't really invest in livestock or like fish farms or cannabis farms. A lot of people ask us that lately. And so farms make money from selling the harvest. And then secondly, farms generate returns from land typically increasing in value as time goes by. Now, this is a blanket statement, but historically, land prices in the last 50 years appreciated by about 5.9% annually in the United States. So similar to other real estate asset classes. And then the way it works, a bit more detail. So again, we are the ones who find the farms for sale, typically, and then when we buy the farm, we either will rent it out to another farmer, which is a very common practice in the United States. A lot of people don't know that, but about 40% of all farms are rented out. Or we contract it out, meaning that we will hire a professional farming company or farming family that will farm it according to the budget and according to our plan. And so you have a spectrum of returns from kind of a more stable, safe rental income to more volatile but potentially higher returning profit from the farm. And our deals are typically a 10-year hold because farming is volatile. So we want to make sure you have a sufficient investment horizon. And then after 10 years, we will look to sell the farm. Yeah.
Huh. Okay. So can you do like a hybrid? Can you have some land that you rent out to another farmer, the rest you contract out, or is it just one or the other?
It's a good question. So on a single farm, it's typically one or the other, but that's when we encourage you to build a portfolio. We also have a way for you to invest into a fund vehicle that we have that will immediately give you a more diversified exposure over a period of a couple of years. versus for you having to pick and choose a particular farm. But we have everything here from pure rental to rental plus what's called a flex lease, where you get additional income if corn prices, soybean prices are high, to a base rent plus percentage of revenue, all the way to, really if the farm does well, you get all the income. If it does poorly, you might not get any dividend that year.
How could a farm do poorly?
Oh man, I mean, in a lot of different ways, from weather, screwing you up, to the cost of inputs, fertilizer, fuel being very high when your crop prices that year are very low. In fact, we had a bit of a perfect storm in the last, couple years in almonds. Almonds, long-term, very attractive crop. Strong believer in that. But in the short term, you had, as I'm sure you and your listeners know, high inflation on a number of different input factors, fertilizer, fuel. We also had this very well-publicized crisis with shipping in California, and that's the big export market or export uh, corridor for almonds. And then the almond prices, because previous harvests were really good, you had a big overhang, and then almonds are consumed, a lot of them, in hospitality, in travel and entertainment, restaurants in Barfield. Guess what? All of those places were shut dead during the
Oh, wow.
pandemic. So you had kind of a double whammy. Again, I think prices starting to recover and the input costs have come down, but that would have been and has been a difficult year for almond farms.
Wow. So you could pick the wrong crop and just get smoked pretty much?
I wouldn't say you would get smoked. I mean, in a particular year you could get smoked, but over a long-term period, when we look at the index and the performance of a diversified portfolio, we believe it would do fairly well. So just to give you a couple more numbers, there's an index in the US called the NCRE Farmland Index.
Mm-hmm.
And from 92 to 2022, the total annual return was close to 11%. So it's done really well. And with low volatility of about 6.7%. So there's a lot of downside protection in farmland, especially over a long period, because again, the land itself has been appreciating for
Yeah.
quite some time.
So you've been appreciating for over a 10-year period. And then can you switch? Like, let's say you start with almonds and it's a bust. Can you switch to something else the next year that's maybe more profitable?
In theory, you can, right? You would rip out the trees, you would plant new trees. In practice,
Mm-hmm.
half of the cost of the farm, rule of thumb, is your trees, and half is your land. So, you would not be able to do it. But the flip side is, once you plant it, it really just keeps
Yeah.
yielding and yielding. So that's the beauty of it. Whereas
It
in
could
corn,
shift over
soybeans,
time.
you have to plant every year. But no, again, it's a great question, and that's why you gotta either build a diversified portfolio, because at the end of the day, one thing I know for sure, you're not going to eat tomorrow, right?
Mm-hmm.
But we might not be eating almonds. You might switch to hazelnuts.
Yeah.
But the general trend is, especially in the area that we specialize in, what's called permanent crops, so nuts, fruits, vegetables. It's a more of a premium crop. So healthy eating, better diet, more income in general leads to people consuming more of those types of products. And so the long-term trend is very compelling.
Wow. Where are you buying these things? Like, where in the country makes these? Iowa, Nebraska?
Yeah. Well, yeah, Nebraska. Yeah, we do have a farm in Nebraska, corn, soybean, but so permanent crops, mostly California, Washington, and Oregon. California grows more than 50% of all fruits and vegetables in the United States. It is an absolute ag powerhouse, and around 75-80% of all US nuts. And California produces 80% of the world almond. So California is an absolute, incredible state with many microclimates and incredible infrastructure. People very smart, the tech and the ports. So California is huge. I'm sure you and your listeners. There's always well publicized headlines about drought in California. Droughts happen in California all the time. That's just cost of doing business, and it's important to get the water right. And then Washington, fantastic state, great water, again, great people for apples, and then Oregon for hazelnuts. And then we do have, of course, Midwest, so farms in Illinois, in Nebraska, in Oklahoma. We have pecans in Oklahoma, and looking at other states as well. So I think we're in 9, 10 states right now.
Wow. And like, how many acres are each farm?
So our farms are fairly small because they're very expensive. So if you're talking about a cornfield, your price will be $5,000-$10,000 an acre, which is still quite high. It used not to be this high even a few years ago. For permanent crops, like apples, you could go as high as like 90,000 an acre. Avocados. So this is, we're talking expensive. Yeah,
Wow. Are you buying existing farms sometimes as well, or is it all always brand new?
both. So a lot of our farms are brand new. We like to, I would say, yeah, some existing. A lot of our farms have been more what we call development. And that's because we prefer to provide what we call creative transformative capital to farmers. So typically we work with very large farming families, multi-generational businesses, and they know really well what they're doing. And they have a lot of ideas and long-term thinking of what they want to do with their business. And we're able to provide them with a capital that is more kind of creative and non-standard versus what they can get from a bank. Because one thing that is really cool to know, I think, in farmland, the financial services and product are very underdeveloped compared to real estate. I feel like in real estate, you can slice and dice things left and right. There's so many fascinating financial models. We have a saying in farmland that we're 20 years behind real estate. So there's a lot that still doesn't exist there that we're able to provide to farmers. So yeah, a lot of it is development.
Wow. Talk me through kind of how it works. So you guys go in, you seek out a farm. What is it like what's something that that's attractive about like for me, I know if I find a deal to me is something that's undervalued, right? So it's got rents that are below market or it's got, capital improvements needed across site, but the main thing is the rents. Expenses are too high. What are you seeking out to know if a farm opportunity is attractive?
Yeah, look, I think farmland is a interesting asset class because it sits in between a few different asset classes. So you have real estate, exactly right, and I think in real estate, buy low, sell high, right? Location, location, location is another one. So that is one of the things we look at. Are we buying it at a good price? And the way we do it is we have this internal tech tool called Terra that continuously scours the internet as well as brokerage websites to always build kind of this dynamically updated comp table. Because one thing is that in farmland, we don't have like Zillows and Redfins. There's no Bloomberg or central source of transaction data. It's still very scattered and hard to access. So that's one aspect. Farmland is also in some ways like timber. It's like bonds. It's like infrastructure. There's a few things here and there. So another thing we look at is with the right team, can we develop it into something? So you have that development premium. And because we work with, I think, like really strong farmers, you as an investor essentially get to piggyback on the expertise and in our oversight. And so there's benefit there. And then you're having a thesis on particular region, particular crops, where you think, hey, this price right now, like almonds, for example, I think is a good buying opportunity right now. So that's important. And then I think what our team does really well is also looking into water in California. It can be make or break a farm. And so being able to invest with good knowledge of water, and we could do a whole other podcast just on water in California, such a Byzantine, uh, you know, framework of laws and regulations and bylaws. So there's a bit of like what we call a regulatory alpha, just understanding the water regulations.
Wow. Artem, what kind of returns do these give you? What kind of cash on cash or kind of
So we proud
IRR?
ourselves on what I call, stable and boring returns. On row crop farms, it's a little bit like multifamily housing. So we target total returns net of all fees of about 6.5 to 7.5% annually over the course of 10 years. But one thing to mention that's really important, especially in this climate, is farmland historically has done really well in periods of high inflation. And that's because it's a real asset with hundreds and thousands of products going into the CPI. So there's almost like a mechanical correlation. We find a lot of our clients, with kind of on that low end, they're not just chasing returns, but also a way to preserve capital, to diversify, and to express a view on, inflation, having almost kind of an insurance policy against inflation. And then on the higher end, we go into 9, 10, 11, sometimes as high as 15% on permanent crops and development. And that's sort of more of a, middle ground where, again, it's a long-term, stable portfolio that, we encourage our clients to build that is uncorrelated to most other asset classes and, has weathered really well. Like, for example, last year, the index was up 9% versus, most stocks, bond were down double digits. So it's done quite well this year. It's done quite well in 2008-9, was up about 20%, done really well during the pandemic, was essentially flat. So it's also, a lot of my investments are in farm deals. And it's definitely kind of one of those invest and forget. because like I said, people are going to eat tomorrow and the day after tomorrow. So
What about like taxes? Are there any tax benefits? Because I know like
there
we have
are, yeah.
depreciation. Talk about those.
Exactly, yeah. And I have to, as always, make a statement that I'm not a tax lawyer. This is not tax advice. Consult
Got to
your
make
own
that
tax
statement.
attorney.
That's important.
I know. So there is a potential for depreciation flowing through to your K1, the tax form you receive. So you could receive essentially a loss from some farms in a particular year, and you could use it to offset other passive income you may have from other investments. So indeed, and there's going to be a change in legislation that, in my view, it's going to stay the same. Um, Farm development right now has really attractive tax regime where 100% of your capex gets depreciated year one. So meaning that when we have development, you get all of that flowing through to your, K1 through your tax flows that year. And again, this is sort of hypothetical calculations, but it can easily improve the IRRs by as much as, a couple hundred basis points if you factor in, the tax aspect of it as well. And then one thing to mention, for kind of the more affluent listeners, we do have what we call a bespoke program. So you can buy a farm in your own name. And that one has even more benefits because you essentially can structure it any way you want. And we're still your private investment manager there. So for people that have that more sophisticated, tax thinking, there's definitely some benefits there.
Wow, that's really cool. So people can get depreciation. Now, in our business, you have to be kind of a real estate professional to really be able to capture that. Is it similar with farmland to be able to capture all of it, cover up like ordinary income, cover up capital gains?
So not for our clients because we take care of all of that. So you just receive a tax form online
Hmm.
and you give it to your accountant and we're like, oh, well, you have this loss, you have this income elsewhere. So we take care of kind of all the accounting on our end. We have an internal team of accountants doing that. And then indeed, we always look for what are some additional ways to help save money. Sometimes like carbon credits or looking in those, additional source of income. Some of our farms have wind and solar options for leases. So if they do put it on, you get some income now, but if they put on like a wind farm, you'll get even more income. And then of course, there is an optionality of farms that are close to cities that they could become real estate developments, which would be like a big boom. We have like some of the farms we have are in a place called Wenatchee, and it's on a beautiful hill overlooking the river. And from what I've heard, right opposite of us, you can see the summer homes, so second homes of Seattle Seahawk players. So this is you're also looking at prime real estate there.
Wow, no kidding. That's pretty cool. What do you see on the horizon for sustainable investing?
Yeah, good question. So, with farmland, I think people naturally almost immediately go there because farming by its nature needs to be sustainable. And what we mean by that is that if you extract everything from the land, well, the value of land is going to go down, and over a long-term horizon, you're just not going to have a farm. And so we see that in a lot of farming families. These days, I get a question oftentimes like, "Have you seen the TV show Yellowstone?" And I started watching it because I have to now apparently. But there's this notion of being a landowner that spans generation. So for us, I think it's really important personally for the planet that we are sustainable farmer. And so what it means for us today is that we're part of this standard called Leading Harvest, which is a third-party audited sustainability standard that aims to kind of audit the farms based on certain metric. And some of them are universal across farms, right? Like how much fertilizer they're using, are using more efficient irrigation systems. Some of them are more specific because also each farm is different and it can mean very different things, what it means to be sustainable. Unfortunately, unlike the organic label, there isn't yet a equally popular regenerative or sustainable label, but we are working on that. So it's still, I would say, look, we're still in early days there because it's such a complex matter. And there's things like, sorry, please stop me at any point, but we can go into issues like regenerative agriculture, carbon capture, not using fertilizer as much. But yeah, we on every farm would look at opportunities to introduce sustainable
Hmm.
practices.
You said that farmland is 20 years behind. What are some things that you're doing to kind of combat that to make it more accessible to investors?
Well, number one is using a lot of tech to underwrite, manage, and syndicate capital for farms. And the reason we need to do that is twofold. One, Just that data is very scattered. Unlike real estate, it's just harder to get data. And if it's hard to get data, it's hard to make investment decisions. And then secondly, the average size of a farm in the US is fairly low. People assume there's this huge farms. Not true. 98% of all farmland in the United States is owned by families, and 70% of farms are less than $10 million in value. So really, you're looking at a small to medium-sized market. So in order to scalably analyze that market to provide capital to farmers, you need to use a lot of tech. So that's really what we're doing. We have two systems internally. One is called Terra, which is on the underwriting side, and Mercury, which is on the capital markets investor-facing side. That continuously just moves the needle on improvements on efficiencies. We have a lot of clients right now, and we would not be able to manage them if we did not have the systems built out. So we're approaching 200 millions in assets under management, and that's because of tech.
Wow. That's really cool, man. So how much are you raising for each project typically? Like what is kind of the amount that
Three
people
to
come in
10
at?
million, so kind of 3, 5,
Mhm.
sometimes a little higher. Yeah.
Wow. That is so cool. Do you have like a corporate team? So you said you kind of you build in, you have a couple different models that you run, but what does your corporate team look like for your business?
So it's a few departments. We have the investment team, and there's a few people there. It's led by Boyd Corkins, who previously was at Hancock, one of the largest, oldest farmland funds in the United States, and worked for a company called Wonderful. And you may have seen Palm or Wonderful Pistachios. It's a well-known family in California. So, one of the best farming families out there. So a few people there. And then we have our accounting team. We have a farm management team as well. And we have our capital markets marketing team that kind of organizes our marketing activities for investors, telling the story of FarmTogether. So it's a fairly lean team. And then, that's why we still, I think, charge fairly modest fees versus other platforms, other players in the market. And that's because we do have the tech and also I think we've been really fortunate with who works with us. We have some great people for sure.
So like one of the things that we can do on our end is we can kind of sell the sizzle, right? Like I'll have like a drone video created for the property. People can get updates, quarterly or monthly on our sites, and they kind of know what they're owning. That maybe they get attached to the project because they're like, oh, that's a property out there. How are you guys? Are you guys doing anything similar to that, where it's like,
We
hey, you
are,
can
yeah,
check on your farm over here with this
that's
drone?
right.
Yeah.
We do drone videos, and it's really cool. We do interviews with farmers. We do pictures, and also quarterly and annually. I would love to, especially as time goes by, to have more of those, on-farm cameras, so you could actually log in and be like, oh, I wonder how my almond orchard is doing. Like, oh, what's that little gopher over there? Maybe better call FarmTogether. Tell
Yeah,
them
exactly.
take care of that. Look at that beast. No, that would be wonderful. And um, one thing, yes, we're definitely investing in all of that. And what's beautiful is like the cost of that tech goes down every year. So I think we'll be able to do more and more of that. Yeah, like some places, the bloom in almond orchards in California is like stunning. Apple orchards can be really beautiful. I mean, all of them are, to me, they all all beautiful.
Can you buy like
And
an acre and name it after yourself?
we don't have that yet. That was actually one of the original ideas of FarmTogether, to sell
Yeah.
almost like this little square, like this is yours.
Yeah,
Um,
exactly.
and we could do it in theory, but in principle, not to be boring, but there's title, and it's indivisible. It's one title, one farm. We start slicing it up. It needs to be individual titles.
Just a funny idea I thought of.
Yeah, yeah.
That's funny.
No, I like it. I maybe we could do it just on a naming level. That would be cool.
Yeah. Cool. Well, Artem, thanks so much for coming on the show. How can people reach you if they want to get a hold of you?
Yeah, absolutely. So farmtogether.com, our client team is super responsive. We also have a lot of materials there to read, educational stuff. Info@farmtogether.com is our email. My personal email, drop me a line, Artem, ARTEM, @farmtogether.com. But yeah, we're super responsive. And we love talking to people about farmland and educating people about the benefits.
I can see that. Artem, thanks a lot. We really appreciate everything. It was really interesting to just hear a different asset class and the business model that you put together. So thanks so much.
Thank you, Garrett.